lower. So that's what's really happening with the market. We're going to keep coming back to this, but first up, some important news which came through on PSU banks. The government has amended the nationalized bank scheme of 1970. So according to the amended policy, appointment of whole-time directors as well as MDs will initially be for 5 years, and then it can be extended for another 5 years. So what does this really mean for public sector bank head? Sapna Das is here with what she's picking up from sources. Sapna.
Hi. So basically, according to the government, the principle for extension of tenure up to 10 years is now established for the top brass of public sector banks. The government is also clear on the fact that since a kind of a precedent is being set, they could also consider if there's a similar requirement of extended tenures in SBI. According to the government, they don't see a requirement there as of now, but broadly speaking, they would be open in case there is such requirement in the times to come, because under the SBI is under the separate act, and that has not been touched. What the government has done is made the amendments via the nationalized bank scheme. So that's that. They're also very clear on the fact that there is an immediate and imminent requirement in nationalized banks for extended tenures. According to government sources, there are a number of EDs, who may be actually retiring much earlier than the age of 60. And the government would not like to lose a talent pool. Their tenures as of now, of course, are up to 5 years. So, hence, this kind of a so-called reform measure, could actually help government retain that talent pool. Also, as I've just mentioned, the changes have come not under the Nationalized Bank Act, but under the scheme. And this is the position as of now. The view, of course, in the market is very clear that this is good news with respect to longevity of top brass in the bank. In banks, basically, can enhance operational efficiency. Better accountability will lead to more confidence within investors. So, that's the picture as of now. But we have to keep a close watch on this space, because there could be some further reforms that may be announced for the banking sector, especially for the nationalized banks in the coming budget. That's what we have picked up some time ago.
Right, Sapna, as you highlighted, very, very important step there for the PSU banks coming in. A big reform when it comes to accountability by the top brass, and also business continuity that you mentioned. But of course, SBI Act and changes for SBI is also watched out for. But Sapna, you're also tracking a lot of developments on divestment as well as privatization front, and sources say that the government is seeking an extension to meet the 25% minimum public shareholding norm for IDBI Bank, and there is some more action on Container Corp stake sale as well. Tell us about that.
Well, in terms of IDBI Bank, what we've given to understand is that, probably in terms of meeting the minimum public shareholding norm of 25%, there could be an extension that will be sought on that. I think sometime back there was some talk that maybe, post-privatization of the bank, once a stake sale has gone through, the residual stakes of GOI and LIC, they could be termed as public shareholding. Had that happened, then maybe the requirement of this, basically the MPS would have been met, because both of them together obviously would be much more than 25%. I think the public float in IDBI at the moment is slightly under 6%. So that was what was being thought about. But now we're given to understand that I think, an extension is what will have to be sought. And let's also keep in mind one thing more, Nisha, that earlier the public float of IDBI was really massive. It came down gradually because the bank went into distress, and there was a lot of capital infusion that had to be done by the government and both LIC. So, that basically led to the public float really coming down, and it's around 6% levels or slightly under that at the moment. So that's one update, of course. Second, also in terms of Concord, what we're going to understand is that the government should be ready with the UIs sometime December. They should be in a position to invite those UIs, and after that, it's going to be a long haul, 8 to 9 months at least, because that's how much time it takes in minimum for any privatization to go through. FTI and BEML, well, they are also very much on the radar. They are expecting the financial bid at least should come into the coming financial year. So to speak, no transaction going through as such, but these are the developments that we have to keep a close watch on. Nisha?
All right, Sapna, thanks a lot for getting us all of the details, and we'll keep coming back to you for any other updates on this. But let's also talk about NMDC now, because this stock is trading in the green, and well in the green after Kotak Institutional Equities upgraded the stock to a buy call. So Nigel is here with more.